Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, January 30th, 2026, and here is everything you need to know as the markets close for today. Indian equity benchmarks ended on a cautious note as traders continued to prefer the sidelines ahead of this weekend's union budget. The Nifty 50 slipped to 25,320, down roughly 100 points or 0.4%, while the Sensex declined by 297 points to close at 82,270, a drop of 0.36%. BankNifty also retreated, finishing at 59,610, down 0.58%. The broader market sentiment was tepid, with investors unwilling to take aggressive long positions before the government's fiscal policy announcements expected on Sunday. Pre-budget caution has been the dominant theme, alongside profit-taking in select heavyweight sectors that have rallied over recent sessions. Defensive plays and selective buying in quality names remained the bright spots, while the overall volume and participation stayed moderate. Currency-wise, the Indian rupee weakened further, hitting an all-time intraday low of 92.02 against the US dollar, before closing at 91.97, marginally above the previous close. This marks the rupee's worst month since September 2022, with losses exceeding 2% already. The weakness has been driven by sustained foreign institutional investor outflows, elevated crude oil prices triggering inflation concerns, and a resilient dollar index. The rupee's decline adds to domestic cost pressures and reflects investor caution on the economic outlook despite India's strong growth prospects. Top performers today saw consumer stocks leading the charge. Nestle India surged 3.32% after reporting a stellar Q3 net profit of 1,018 crore, up 46.23% year-over-year. Tata Consumer products climbed 2.49%, and Apollo Hospitals advanced 2.35%. ITC rose 1.19% despite a 6.1% year-on-year profit dip, with the decline attributed to a one-time new labor code cost. The standout gainer was Vodafone Idea, which rocketed 10.75% after announcing a 3-year investment plan of 45,000 crore to return to growth, capping a strong turnaround narrative. Blue Star also gained 5.17%. On the flip side, the day's biggest losers were brutal. South Indian Bank crashed an unprecedented 19% to 36 rupees after its MD and CEO PR, Seshadri, announced he would not seek reappointment, sparking leadership uncertainty concerns despite the bank's healthy Q3 results. Tata Steel fell 4.83%, Coal India dropped 3.43%, and JSW Steel slumped 2.13% as metal stocks faced selling pressure. Max Healthcare declined 6%, while Hindustan Copper lost 11.07% in small cap space. Among blue chips, ICICI Bank was a notable weak spot, down 1.71%. These declines underscore the market's preference for consumer-led gainers over cyclical and banking exposure ahead of the budget. Support and resistance remain critical intraday levels as traders navigated choppy waters. Nifty 50 tested resistance near the 25,490 mark. A sustained break above this zone would open the door toward 25,500 to 25,600. The index found near-term support around 25,280, with a stronger base placed at 25,150. BankNifty faced resistance at 60,150 and 60,240, while immediate support stood at 59,700, with a stronger level at 59,500. The index's ability to hold above the critical 59,000 mark will determine whether the uptrend remains intact ahead of the budget verdict. From a sectoral lens, IT was the clear underperformer, sliding 1.32% as global tech weakness and US rate cut concerns dragged majors lower. Nifty IT fell over 500 points to close near 37,900, with names like Tech Mahindra and other IT heavyweights under pressure. Banking also saw profit-taking, with the sector down 0.58% after a recent run-up. Defensive sectors, however, held their ground. Pharma outperformed, rising 0.72%, with Nifty Pharma climbing 154 points to 21,718, buoyed by bargain hunting, and the sector's stable earnings outlook. FMCG was relatively stable, holding near flat as the initial tax shock from earlier weeks settled. Consumer staples and pharmaceutical plays were the safe havens, reflecting investors' risk-averse approach ahead of Sunday's budget. From a regulatory and macro standpoint, the day was marked by budget anticipation rather than fresh announcements. However, the economic survey released yesterday has reignited discussions around rupee weakness, with officials noting the currency is punching below its weight despite strong domestic fundamentals. The survey projected FY27 GDP growth in the 6.8 to 7.2% range, providing a constructive backdrop. SEBI's recent regulatory updates include new governance frameworks for stockbrokers, tighter rules for market infrastructure institutions, and the formalization of the informal guidance scheme for clearer regulatory processes. These changes underscore SEBI's continued focus on market integrity and transparency, though no immediate trading impacting news was released today. Traders are now laser-focused on Sunday's budget for clues on capital gains taxation, fiscal discipline targets, and sector-specific incentives, which could drive significant volatility next week. Commodity markets painted a mixed picture. MCX gold fell 3%, closing near 1,70,000 rupees per 10 grams, down from previous day's highs, as profit-taking accelerated after gold's stellar year-to-date rally of over 27%. Silver also corrected, trading around 4,10,000 rupees per kilogram, down from record highs, though still up substantially on the month. Crude oil, however, bucked the trend, rising to around $68.98 per barrel, supported by renewed geopolitical tension over potential U.S. military action against Iran. This elevated oil price remains a headwind for the rupee and domestic inflation expectations, keeping RBI closely monitoring global developments. Geopolitically, the week saw escalating Middle East tensions as discussions around a potential U.S. strike on Iran intensified, with U.S. naval forces deployed to the Persian Gulf. These developments have kept crude oil prices resilient and volatility elevated across risk assets. Concurrently, global trade discussions remain fluid under the Trump administration, with threats of significant tariffs on various trading partners, creating an undercurrent of uncertainty. These external headwinds continue to weigh on emerging market sentiment, including India, pushing capital flows towards safer havens and supporting dollar strength. Looking ahead to Monday and beyond, the technical setup suggests Nifty 50 will consolidate within the 25,000 to 25,500 band until the budget clarity emerges. If the index sustains above 25,400, the path to higher levels toward 25,700 to 25,800 remains open. However, a break below 25,150 could accelerate declines toward the critical 25,000 zone, a support level aligned with the 7-month rising channel. BankNifty's trajectory hinges on holding the 59,000 base. Sustained strength above 60,000 could unlock gains toward 60,500. Volatility will remain elevated, but the long-term structure for equities remains constructive, supported by strong earnings growth and steady FY27 GDP projections. The Union Budget on Sunday will be the key catalyst, potentially reshaping sector rotations and driving significant intraday swings next week. Here's your actionable takeaway for today. Pre-budget positioning is key. If you're looking to trade or invest, consider using any dips towards support levels as buying opportunities in quality names, especially in defensive and consumer-focused spaces that have proven resilient. The rupee weakness at record lows is a real concern for import-heavy companies, but exporting sectors could benefit. Watch for budget clues on tax policy and infrastructure spending on Sunday. Clarity on these fronts could drive a major rally across cyclical and financial names early next week. On the technical front, hold your longs above support and use rallies to trim positions in IT and other sectors showing weakness. Stay disciplined as volatility spikes ahead of the announcements. Thank you for tuning in to today's What Moved the Market show. Send in your market questions and trading tips to our studio, and join us first thing tomorrow morning for the market wrap-up and detailed technical analysis. Until then, stay informed, stay disciplined, and we'll see you at the opening bell tomorrow. This is Prem signing off. Good evening.